Dear partners at Genesis, welcome. I'm excited to share what's been happening in the last quarter. Have some interesting developments that are happening in this space, especially in the regulatory environment. Want to share with that. With that, let's get started. So in this call today, we are going to be covering a number of different agenda items. One, we're going to take a look at the state of the market. Where is crypto overall? What are some of the regulatory changes that are happening? Some interesting developments that would lay down the foundation for what it looks like are being worked on, and how Wall Street and the global financial industry is reacting to this. There are two outcomes that I personally have for these updates. Is number one, to be able to inform you what's happening in the industry, to be able to build our wealth by looking at right investments. And the second, which is also very important, is to be able to educate on the next evolution of what's happening with finance, banking, social media, identity, and much, much more. So it's a dual intention to provide update on what's happening with Genesis, but also be able to educate on what's happening in the industry as a whole. We are entering this new world of Web3. It's an entirely new playing field. There are tremendous opportunities ahead. And I do believe that the fundamental way in which we organize business, we organize finance, communication, and society is changing. This might seem like something that might happen far way ahead in the future. And based on the research and the developments that we are seeing in the industry, I think that this change is closer than what many people think. Specifically in the crypto industry right now, there is a lull, right? All the crypto tourists are gone. I live in Puerto Rico, and during summer, what happens is all the tourists in Puerto Rico are gone. You can make any reservations in any restaurants. It's easily available. If you're walking down the streets, you don't see all the tourists during summer. And the locals, right, they stay put, they brave the hurricane and high humidity. And guess what? Like clockwork, the tourist returns on the next cycle. Similarly, in the crypto industry also right now, there is a lull. All the crypto tourists are gone. People who came in to kind of look at it, right now it's a new way for being able to have some advancements in technology. People invested money. Some of them have lost money. And all the tourists have now left. The crypto tourists have now left. And this is an important moment because the industry transformation is continuing to happen. In this update, I want to look at three main categories of why we think that the industry transformation is happening. First one is we're going to look at regulatory change, or FIT21. What is it? I think it's a very fundamental regulatory structure that is in the right direction. Number two is Wall Street and how the global financial industry, how they are coming together and innovating in the space. The innovation never stops. And one thing that we are betting on is we are betting on innovation. And also Bitcoin halving, and what are some of the macro signals that we are looking at. We've been waiting for the signal for almost like 4 months now. We just had one of the signals hit and would like to share with you about it. So let's dive in. There has been a new regulatory framework that's proposed. It's gone through a few name changes. Right now, it's called as the Financial Innovation and Technology for the 21st Century Act, or in short, FIT21. And what FIT21 is, it's a bill to establish the regulatory framework of digital assets. And it's a joint effort from two committees in the House of Representatives. It's the House of Financial Services, which you would expect, and you also have agricultural community. Like, why is agricultural community involved in the FIT21 Act? That's because of the two regulatory entities that are involved, right? Like the SEC, which was what controls a lot of the how securities are being categorized, regulated. And you also have CFTC, right? CFTC has been traditionally for commodities and has been associated with the Agricultural Committee. And this new law, FIT21, actually instructs both the FTC to work together, to collaborate together, to come up with a new set of regulations rather than how it is currently being happening in the industry, right? So what's happening right now is that the SEC says, oh, this is a violation of law, and it sues Ripple or it sues Coinbase, and then it's decided on the court what the law is. Instead, what the FIT21 bill says is, hey, right now, rather than trying to establish the law for how we regulate digital assets by going through courts and doing it off one-off. Congress is going to determine how the regulations are being done. And they also involved the Government Accountability Office in a study for being able to regulate what are these assets. It's a very well thought out definition. There are about 300 pages, and went through and read through the bill. It also has a way for being able to understand first before regulation, which is kind of surprising because regulators and politicians, they just want to jump in and regulate it before. But this one talks about, hey, we need to do two studies specifically around DeFi or decentralized finance, and to understand what are the benefits and what are the trade-offs from a policy perspective. And those two studies are going to be conducted, one by the SEC and FTC, so they need to collaborate, work together. And the second one by the Government Accountability Office, or the GAO, separately. So the both studies are being done. They have to come together. And it has very clear definition of what is blockchain, what is mining, what is staking. And this is the first instance of the regulatory bill that we saw, which brings more clarity, and it has got some bipartisan support. At the end of the day, we don't know whether this bill is going to pass or not, whether FIT21 is going to pass, but the framework and foundation in FIT21 will be used for any other bill that might come in the future to give pretty clear clarity. And this is one of the things that I've been talking about for almost 4 years now, is the industry needs to be regulated. We need to have clear definitions and regulate at the right amount, right? We should not over-regulate the industry, which is what happened when cars first came about, right? When cars first launched, they had a regulation that someone should run in front of a car carrying a flag, and so that people are informed about it and they don't get hit by a car. Guess what happened? That regulation essentially meant that only the rich members of society would be able to have access to the car, and that was over-regulated. And now we have the right amount of regulations for the car. So similarly, in the cryptocurrency industry, in the blockchain industry, we need to have the right amount of regulation, not over-regulated. And once the regulatory clarity is there, it's going to open up a flood of new money and new investors that are going to be coming into the industry, right? Not just from what's happening in the US. If you look at globally, the BIS, Bank of International Settlement, which is a collaborative unit of the various banks that are happening, they released international blueprint report for tokenized assets, right? And specifically around having this unified global ledger, which helps central bank digital currencies, which helps central bank issue digital currencies. So it's a very fundamental framework. So that happened. The IMF released a report, and they pretty much reversed their stance on cryptocurrencies. Before, they said that any country that touches cryptocurrency, won't work with us. Now they have reversed it. And Jerome Powell, who's been a very staunch very staunch crypto kind of anti-crypto, so to speak, he noted in that, one, that they are involved in FIT21 and the regulations around it. And two, he mentioned that the industry seems to have some staying power, which is very strong words. Again, this is a press release for BIS on how they have a new blueprint for the monetary and financial system. IMF, reversing their ban on cryptocurrencies, and the Fed, saying that we need to have robust rulings specifically around stable coins. So all these regulatory changes are happening not just within the US but globally. Now, when we have regulatory clarity, right, it's going to open up a flood of new money coming in, and Wall Street is already in the party, right? JPMorgan Chase, they launched the euro-denominated payment for the JPM coin. So now people in US have been using it because the JPM coin was denominated in dollar. Now it's also denominated in euro. BlackRock, the world's largest asset manager, they have close to $10 trillion AUM. They have filed for a Bitcoin ETF. Taurus, which is a new protocol that is backed by Credit Suisse and Deutsche Bank, they launched on Polygon. And what Taurus does, it enables financial institutions to issue tokenized assets. I do believe that tokenized, the whole entire industry of blockchain is going to be a quadrillion-dollar industry. It's 1,000 trillion. How do we get there? Through tokenization of assets. It's a meta asset. It's going to represent all of real estate, like all of securities, all of other assets that we traditionally have can be represented as a token. So Wall Street is already joining the party. This is the JPMorgan issuing the JPM coin in Europe, BlackRock filing for ETF. Of course, the regulatory SEC has delayed their decision. And in my opinion, there are certain inevitables that is going to happen, right? Technology is going to continue to improve. That's a broader umbrella. Within that specifically, we are going to have a digital currency. It is inevitable. If I think about it, the next maybe 20 years or so, we're all going to be using digital currencies, right? It's inevitable. How we get there, it's a different story. When we get there, I don't know, but we are going to have digital currency. Every country is going to issue digital currency. We already see China and a few others who are experimenting with it. That's number one, given, right? Number two, a Bitcoin ETF is also inevitable. It is going to happen. If I think about it, the next 5 years, I'll be really surprised if we don't have a Bitcoin ETF. And whether the BlackRock one is going to get approved, maybe BlackRock has a pretty good batting record. They are 576 to 1, meaning that they have submitted 576 applications, which has been approved and one has been denied. So there is a very high likelihood that this ETF is going to get approved. Let's see how that evolves. And SEC, as I mentioned, has delayed. Not only is BlackRock filed an ETF, there are 7 other applications for being able to have a Bitcoin ETF. And once we have a Bitcoin ETF, there is an estimated $1.5 billion of interest that will come in. And roughly, again, this is not exact, but roughly every $100 million increases the price of Bitcoin by about 10%. So if you have $1 billion come in, it will more than double the price of Bitcoin from where it is right now. And it will lay the foundation for the next bull run. We talked about Taurus, and there is a lot more innovation that is coming, right? There is a new exchange called EDX, which is a crypto exchange. It went into operation, and EDX is backed by Fidelity, Charles Schwab, and Citadel Securities. There is a Committee on Capital Markets Regulation. It is a collection of various banks. The banks include like Wells Fargo, JPMorgan, Bank of America, Charles Schwab, and they have criticized SEC for saying that, hey, the regulations are hindering platforms from achieving compliance. There is not clarity, and the SEC approved Coinbase to go public. Now they're coming back and suing. So even if someone wants to go and be completely compliant, right now it's not very clear, and we would get those clarity. So because of this, I do believe that we are having a new era of digital assets. One is that the regulations, global regulations in the US and the rest of the world is accelerating, bringing more clarity to the space. Number two, Wall Street and global financial industry are now entering the space, having their foot in the door through a variety of different paths. And if you are still skeptical, totally understand. If you look at the price, it doesn't reflect of what all the developments that are happening in the space. And that's why, we talk about having asymmetrical information. This is not covered in news at all. And that is our edge in terms of investing. Now, when we look at Bitcoin halving, it happens every 4 years. It reduces the Bitcoin reward by 50%. And it happens roughly every 4 years, right? The why 4 years? It's coded in actually for every 210,000 blocks. That's what is in code. And each block takes about 10 minutes, right? Give or take. That is not very deterministic. It depends on the amount of hashing power that's available in the entire network. So sometimes it's more than 10 minutes. Other times it's less than 10 minutes. And what it does, it controls the inflation and ensures Bitcoin scarcity. Now, with halving, if you look at it, the last 3 halvings, right? The first one, it had almost 19,000% return. So, which is 198 times the money, right? The second halving was 7 times or 738%. Third time was around 477%. So, it's halving always has increase in the value of Bitcoin. Why? Pretty simple economics 101, supply and demand. You have the supply that is reducing by 50%, right? Even if the demand stays constant, the price will increase because your supply has now been cut by half. And we are preparing for the next halving, right? We're going to look at some long-term macro signals, specifically the 200-day moving average. And this is a signal that we've been waiting for. So this chart, you may not be able to see it. The blue line represents the 200-day moving average. And the purple lines are the 4 Bitcoin halving, the 3 which has happened in the past and one that is coming up next year. If you look at the 4 halving, the next chart, you'll be able to see it maybe a little bit more clear, is this box is a 1-year window before the halving. And every time the 200-day moving average, the price dips below the 200-day moving average, that is a great entry point. We saw that happen in the first halving, the second halving, third halving. So specifically, if you look at the halving before that happened in 2, right, the 200-day moving average dipped below the price, and that was a great entry point. And then from that point onwards, it's a pretty bull market. And we had the same kind of trigger signal hit about a week ago, where in which the price dipped below the 200-day moving average, which is a good entry point. So I do think that we are kind of gearing up and preparing for the next halving that is coming up. The other part of the equation is that the global economic, the macroeconomic picture is still not conducive. So that's the one caveat for what's happening in that space. And so that's the overall industry. To summarize, one, there are a lot of regulatory changes that are happening. Wall Street and other financial industries are preparing for it. And 3, we had another bullish signal that flashed for Bitcoin that we've been following for the last 9 months. Excited to receive feedback of how we can improve. So if you had one thing that you want to share about the update today that you liked, please email me directly. And if there is one thing that we can improve, can help get the information to you in a much more impactful way, please let us know. Would be happy to incorporate your feedback. We're always looking for feedback. Thank you, and we'll see you in the next update. If you have any questions, feel free to reach out to me directly. Thank you very much. Bye.